People often debate whether stocks or real estate are the better path to wealth, but the truth is rarely simple or emotional. Each asset builds wealth in a different way and rewards a different mindset. Many investors fail, not because they choose the wrong asset, but because they misunderstand how each system works over time. In this video, you will see a clear comparison between stocks and real estate and how each truly builds wealth. Like and subscribe to continue learning practical strategies based on logic, not hype. 1. How stocks build wealth. Stocks build wealth primarily through ownership in businesses. When a company grows its earnings revenue and market value, shareholders benefit through price appreciation and dividends. Stocks allow participation in economic growth without direct operational involvement. Over long periods, markets have historically trended upward, reflecting productivity and innovation. Stocks reward patience, consistency, and reinvestment. Investors can start with small amounts and scale gradually. Liquidity allows easy entry and exit. However, results depend on discipline and long-term holding rather than speculation. 2. How real estate builds wealth. Real estate builds wealth through rental income, appreciation leverage, and tax efficiency. Investors own physical assets that generate cash flow while increasing in value over time. Tenants contribute to loan repayment, building equity steadily. Real estate rewards active involvement and long-term holding. Unlike stocks, it offers direct control over performance through management improvements and optimization. Wealth grows from income stability and asset ownership. Real estate builds wealth through tangible progress rather than market pricing alone. 3. Time commitment differences. Stock investing requires minimal ongoing effort once a strategy is established. Real estate demands active management, maintenance, and oversight unless delegated. Time commitment influences suitability. Investors seeking passive growth may prefer stocks, while those willing to engage actively may favor real estate. Time is a cost often ignored. Understanding effort requirements prevents burnout and misalignment. Wealth grows best when strategy matches lifestyle capacity. 4. Risk exposure. Stocks face market volatility driven by sentiment, economic cycles, and external events. Prices fluctuate daily. Real estate faces location risk, tenant risk, and operational risk, but prices move more slowly. Stock risk is visible and immediate, while real estate risk is gradual and structural. Both carry risk, but in different forms. Understanding risk exposure allows better planning and emotional control. Risk management is essential in both systems. 5. Leverage availability. Real estate allows significant leverage through financing, enabling control of large assets with limited capital. Stocks generally offer limited leverage for long-term investors. Leverage accelerates gains and losses. Real estate leverage magnifies returns over time when managed responsibly. Stocks rely more on capital contribution and compounding. Leverage creates faster equity growth, but increases responsibility. Choosing leverage depends on risk tolerance and discipline. 6. Cash flow generation. Stocks may provide dividends, but income is not guaranteed and often modest. Real estate generates regular rental income that can cover expenses and provide surplus cash. Cash flow improves resilience during downturns. Income stability allows reinvestment and portfolio expansion. Cash flow gives real estate an advantage for income-focused investors. Stocks excel in growth, while real estate excels in income consistency. 7. Liquidity and flexibility. Stocks offer high liquidity, allowing quick adjustments and rebalancing. Real estate is illiquid, requiring time and cost to buy or sell. Liquidity provides flexibility, but can also encourage emotional decisions. Real estate illiquidity enforces patience and long-term focus. Flexibility versus stability is a key trade-off. Investors must choose based on temperament and goals. 8. Tax treatment. Tax treatment plays a significant role in determining long-term net returns. Stocks are generally taxed on dividends and capital gains, with relatively limited opportunities for deductions or deferral. Real estate, by contrast, offers powerful tax advantages through depreciation deductions, interest expense offsets, and deductible operating costs. These mechanisms often allow investors to reduce taxable income while still generating positive cash flow. Real estate also enables more strategic tax planning across time and ownership structures, whereas stock taxation tends to be more direct and standardized. 9. Scalability and diversification. Stocks offer exceptional scalability, allowing investors to spread capital across industries, regions, and asset classes with relatively small amounts of money. Diversification can be achieved quickly and efficiently through public markets. Real estate diversification, however, requires larger capital commitments, operational involvement, and management systems. While this slows scalability, it also concentrates ownership and decision-making control. Stocks provide speed and breadth, while real estate provides depth and influence. 10. Which builds wealth better? Neither stocks nor real estate is inherently superior for all investors. Stocks build wealth efficiently through compounding, market growth, and participation in expanding businesses. Real estate builds wealth through income generation, leverage, tax efficiency, and direct control over assets. The better choice depends on individual goals, time horizon, risk tolerance, and discipline. Many of the world's wealthiest investors combine both strategies to balance growth and stability. Long-term success rarely comes from exclusivity. Stocks and real estate are not rivals, but tools that work best when understood correctly. Each builds wealth through different mechanisms and rewards different behaviors. The smartest investors choose strategy based on alignment, not emotion. When used intentionally, both assets create long-term security and freedom. If you want to keep learning how real wealth systems actually work, then like and subscribe so you never miss clear, grounded insights that help you build wealth with confidence and clarity.